Hi everyone! If you are a local resident or working in Singapore, you are probably very familiar with companies listed on Singapore Straits Times Index (STI). It is the local stock market benchmark and includes the 30 largest companies in Singapore. Take a look across the financial district and shopping malls. It is not difficult not to know these companies in Singapore. Singapore's economy is one of the most stable in the world. It is not a bad idea to invest in Singapore stocks. However, if you are looking to diversify your portfolio to include exposure in other countries, it is totally doable. It is also very common to invest in US stock as it is known for its high growth potential. Stable and growth stocks, you can have both. So how to start investing in Singapore and US stocks? And what are the differences? First, brokerage account. In order to do so, you would need to have a brokerage account. There are many choices of accounts that you can choose from. They can be the bank brokerage such as UOB Kay Hian, OCBC Securities, Maybank Kim Eng, and DBS Vickers, and some independent brokerage like Futu Mumu, TD Ameritrade, Saxo, Tiger Brokers, and many more. For buying Singapore stocks, you can open a CDB account, Central Depository account with SGX, and then open a CDB linked brokerage account. The advantage of doing this is you will be able to see all your Singapore stocks holding that you buy from various brokerage accounts into just one CDB account, and then you can choose to use different brokerage to sell. All the stocks are under your own name and you are the shareholder of the company. That means you can enjoy the perks of attending annual general meeting, AGM, or have the voting rights as shareholder. If you are the type of investor that buy and hold the Singapore stock for long term, so having a CDP linked brokerage account could make things easier and more manageable for yourself. On the other hand, if you are an active trader or short-term investor, you can consider open custodian brokerage account. This would be a nominee account, meaning the stocks are not under your own name, but rather be held in a custody on your behalf. For buying US stocks, the only option is to buy via custodian account. CDP account is only for storing Singapore listed stocks. So if you are looking to US stocks, there are brokerage that offer 0% commission such as TD Ameritrade and Futu Mumu. Some brokerage firms are also offering attractive welcome bundle with free share to new account user once you make deposit and make a few trades. Second, minimum trading unit. For Singapore stocks, the minimum trading unit is one lot, 100 stocks. For example, for DBS share price of 33 Sing dollar, the minimum investment would be 3,300 Sing dollars for buying 100 shares. For US stock, the minimum trading unit is one share. You can opt to buy just one share. Let's say per share, you buy one share at 160 USD. If you are having limited capital to invest, this is definitely a factor to consider. Let's say you have a capital of 5,000 Sing dollar to allocate. Investing in one lot of DBS shares account for 66% of your total portfolio value, while investing in one Apple shares at 160 USD dollars, equivalent to Sing dollar 223 dollars, account for less than 5% of your portfolio value. In short, for having limited capital, if you invest in Singapore stocks, you are exposed to higher risk in the specific country and industry performance, which is Singapore banking sector, as compared to US tech stock. Third, trading time. Singapore trading time open from Monday to Friday, 9 AM to 6 PM Singapore time, while US trading time in local time start from 9:30 AM to 4 PM for both NYSE and Nasdaq exchange, which translate to Singapore time from 9:30 PM to 4 AM. If there is a daylight saving, trading got delayed to start from 10:30 PM to 5 AM SGT. It is possible to trade outside the regular trading hours before the 9:30 AM and then after 4 PM US time. However, after hours trading is more volatile and riskier because there are less participants. Most likely there are institutional investors. Public holiday in respective country are non-trading days, which investors shall take note. Fourth, taxes. In Singapore, dividend income distributed by a Singapore company to individual shareholders are tax-free. So this is the reason to invest in Singapore dividend stocks, as those income are tax-free. However, for dividend income received from a US listed company, including individual stock, ETF, exchange-traded fund, or any funds, is subjected to 30% US dividend withholding tax. This is because Singapore does not have a tax treaty with the USA. Let's say you have an ETF in Vanguard S&P 500, which pay out dividend of 1.6%. The latest quarterly payout was in June 2022. So for each stock you own, you are entitled to $1.43. And this becomes only $1 after deducting the 30% withholding tax. The tax is automatically deducted in the margin account, so not to worry if you would need to do anything about it. This is the reason it may not be a good idea to invest or focus on dividend stock in the USA. Now, you might be thinking whether we are subjected to the capital gain tax from selling US stocks. Considering if you are a non-resident alien, let's say we are non-US citizen, the only investment we have is the US securities, then we are not subjected to the capital gain tax. Then we have to check the Singapore tax law if we are subjected to capital gain from selling foreign share. And fortunately, Singapore does not impose tax on gain from sales of shares and financial instruments. We'll attach the link of IRAS in the description box below for your reference and any updates. So that's it for this video. Briefly share about the difference of investing in Singapore and US stock. You may comment below to let us know if you have a different experience and perspective. Appreciate if you can give us a like and subscribe to the channel to support us. Thank you and see you again in the next one.